Why is it that it feels at the moment everybody's investing back into UK real estate again? It feels like in 2026, every private wealth fund, pension fund, family office, retail investor, sheikh is investing in the UK. And the question seems to be, how and why do I get into UK real estate? This isn't a coincidence that these people are getting in. This isn't fashion. And in the next few minutes, I'm going to show you exactly what's driving it, why the timing matters more than most people realize, and why the investors I know who've built serious wealth have one thing in common. They moved when others were still thinking about it and sat on their hands. But let's talk about why people are getting into the UK property, and then you can make your own decision on it. Let's start with the US, the sort of globe's favorite investment space. The S&P 500 has had an extraordinary run, up nearly 80% in 3 years. But the problem with extraordinary runs is they price in a lot of optimism. In fact, the Shiller PE ratio, the measure of how much you're paying per unit of return, is currently sitting near 41. The historical average of that is 17. And the last time we saw levels like this was right before we had the dot-com crash in the early 2000s. Add to that the political and trade uncertainty coming from Washington, tariffs and policy unpredictability, shifting alliances that we're seeing at the moment, and you have a serious situation where international investors are quietly thinking, am I getting paid enough for the risk that I'm taking in these markets? More and more the answer to the US is no, and when it's talking about US and the amount of investment they get, that's a lot to be distributed through other economies. A lot of people are thinking, how about we rotate into emerging markets? Higher growth, lower valuations, historically a reasonable play. But look at what's happening. Places like Turkey, certain parts of Asia, Africa, South America, all facing an inflation environment that are going to be increasingly difficult to manage with what's going on internationally. When inflation becomes structural rather than cyclical, it erodes real returns, destabilizes currency, and makes long-term planning almost impossible. These are the kind of macro conditions that make pension funds, private equity firms, and family offices start asking a very simple question. Where in the world can I put investment that is genuinely protected? And the answer is increasingly the UK, not because it's fashionable, it's because data is unambiguous, and we love data here, as you know. Institutional investors have already voted with their capital. This is not something that could happen. This is something that's happening right now, but maybe you're just not noticing it. Blackstone, the largest real estate investor in the world, has committed to investing 100 billion into the UK. They have already control over 17,000 residential properties here. Aviva, Legal & General, M&G are all deploying billions into the UK property market. Last year alone, institutional investors just started off with a £1.5 billion investments into single family homes in the UK. That's not a trend, it's a cultural shift. And here's what makes this moment significant, and you can't miss this. Institutional investments in the UK currently account for only 3% of rental homes. Compare that to Germany, where it's 37%, the US, where it's 41%. We are just at the very beginning of this consolidation. We are not at the end. We're not even in the middle. This is the beginning, and this gives an opportunity for retail investors. Now stack that institutional demand on top of the existing huge housing shortage we have. The UK has an undersupply problem that successive governments have failed to solve. Demand doesn't go away, it builds. And on top of that, with mortgage rates dropping, HSBC, Nationwide, Halifax, all saying they're reducing their rates, the Bank of England cutting rates recently, and the direction of travel for lending is going one way and demand going the other way. 1.8 million UK homeowners have fixed mortgage deals expiring this year. They're going back into the market with potentially better borrowing power. Owner-occupier demand is rising, rental demand is rising, institutional demand is rising, and supply has stayed unchanged. The two forces are pushing on price at the opposite end at the same time, driving the market up and potentially seeing significant increases. And here's what many international investors discover when they sit down and look at the UK property numbers. Initially, you might think, whoa, tax is quite high in the UK. But what you might not realize is tax operates on a tiered system in the UK. On rental income, for example, you benefit in many countries from a personal tax-free allowance, which means you can pay little to no tax on your first 1 to 2 properties. This makes you investing in UK property very efficient compared to any other global market, converse to what people think. On top of that, strong regulation, legal processes, stable policy, and rental demand means that the UK market is going to be successful for years. This all comes onto your net return and your profits. And entry has never been more accessible for international investors. You can invest from as little as 25%. Lending is competitive and the structure is already built for international investors with strong regulation and consistent return. Low entry point into this market means that the world's most sophisticated money is now moving into the UK at scale. Google it, have a look if you don't believe me. And I want to speak directly to you who are thinking, yeah, that's brilliant, but I want to just sit and watch it play out. This global uncertainty is real, but what history has shown us is during global hesitation, money almost always moves and floods into the UK market. And the returns that follow are significant. Look at 2020 as an example. COVID lockdown and global markets were gripped with uncertainty. International capital poured into the UK residential property market. The investors who moved during that window captured 20% growth, followed by one of the strongest market runs that we've ever seen. If you go back further, look after the dot-com collapse, right? Where confidence in equities was shattered globally. Capital rotated hard into UK bricks and mortar. UK property values more than doubled. And look at what's happening right now. US uncertainty is doing this again. Institutional money is again moving out of equities, out of emerging markets, and into low risk or what's perceived as low risk positions. What this is doing is looking at the stability and the regulation and the consistent returns of the UK property market and pushing money towards that. Blackstone didn't commit 100 billion to UK property because they were feeling brave. They weren't gambling. They did it because it's a historical pattern and it's unambiguous. Global hesitation has been one of the most reliable precursors to UK property growth we've ever seen, which is precisely why now is the time to invest before these institutions and other big money coming in pushes the prices up before you get in. The investors sitting across from me who invested with us during the times that I've referenced before are now sat on life-changing returns, portfolios, and huge amounts of money because they recognized the moment and they acted on it. This is why it's unusual for me to make these videos, but I'm saying now is the time to go. If this resonates with you and you can see what is happening in the market and you want to understand what that means for you specifically in your personal situations, the next step is simple. Register below and we'll book you in for a free one-to-one with a specialist. A real conversation about your situation with real smart people who aren't just trying to sell to you, but they're trying to understand you and whether the market and what we have fits for your certain situation. There's no obligation. We want you to buy, of course, but we want you to buy because you understand it's the right time for you and we have the right investments for you. If you want to speak to us, please click register below. We'll call you immediately and book you in for a free one-to-one.